So good morning, everybody. I'm Eric Derby. I'm with the Food Shed Alliance. The Food Shed Alliance works to strengthen the viability of natural farming in New Jersey and improve access to healthy food and protect natural resources. Our mission and work are very similar to the mission of the Intervale Center, which is where our guest speaker is from. Sam Smith is the farm business planner at Intervale Center based out of Burlington, Vermont. Sam has been working with farmers over 10 years to improve business management skills and help them meet their farm financial goals. So before I get started and turn it over to Sam, I'd like to talk to you just a little bit about housekeeping that you're probably all well too familiar with these last couple of years. But let's keep our chat in, introduce yourselves and talk amongst yourselves in the chat. Both Tess Mullen from the Food Shed Alliance and myself will be monitoring the Q&A, where we'd like you to keep your questions for Sam, which we will then monitor and curate and present at the end of Sam's presentation. So I would like to turn it over to Sam right now, and we'll get going. Thank you, Sam.
Cool. Thank you, Eric. Yeah, like Eric said, my name is Sam Smith, and I work for the Intervale. I'm going to get my PowerPoint rolling here and then do a little bit more of an intro. All right. Hopefully you can all see that. So yeah, I'm going to give you a little bit of background about me and our organization, just to give you a sense of where we're coming from. You may or may not be familiar with the Intervale Center. We are based in Burlington, Vermont, which, if you look at that picture right there, it's sort of in the middle of the screen, just to the west of Montpelier. We are a land-based organization, so the Intervale is an organization, but it's also a place. So the Intervale is located at the headwaters of the Winooski River. It's the historical lands of the Abenaki people, and it's always been a place of really high human activity. And so the organization itself, if you look at the map here, you can sort of see the city of Burlington, which is about 150,000 people in the Burlington metro area. And then the Intervale is located on the floodplain, and we manage about 350 acres. We have a mixture of commercial farms. We currently have 7 commercial farms operating that vary in scale from about 50 acres in production down to about a ½ acre in production. The majority of those are vegetable farms. We don't currently have any livestock farms in production. We also have a really large community garden and a couple of different commercial businesses. Yeah, and then otherwise we also have a food hub, which is sort of in the process of changing a little bit, but is primarily shifting towards wholesale distribution for farms throughout the state. We have a conservation nursery that does primary riparian buffer plantings, mostly on agricultural sites, actually. And then we are really focused on the engagement of the local community around where their food comes from and educating about the process of food production and making healthy decisions around food. And then the portion of the organization that I manage is our farm business services. We provide farm business planning services to about 150 farms a year. And those farms range from new and beginning farmers to value-added businesses to farmers who are in the process of exit and need some succession planning. I manage a staff of 3 other full-time business planners, so we provide a lot of support. And so today, well, I'll give you a little bit of background about me. I have a background in production agriculture, both livestock and vegetable production. I didn't grow up on a farm, but I have worked for and managed a number of different farm operations and have a small sheep flock myself. And I've been doing this work for about 10 years now. I have a green MBA that informs the work that I do, and I'll probably talk a little bit about that within the context of the business planning process today. I really enjoy the work that I do, and I think that as we talk about business planning, I'll talk about the process that I use with farmers, but I'm going to try and place it within the context of potentially doing this work yourself. So if you're thinking about when and how and why to do the business planning for your farm, I'll try to give you some insight into the process that I use, but also some potential resources that you can use in a sort of self-guided process if you don't have a resource like me to help guide you along. So yeah, let's talk about the business planning process. The business planning process for me is really, it's at the core of business development. My goal is primarily to guide farmers through the process, but also as part of it, really build the business management skills that lead farmers to think about their farm as a business. A lot of folks get into farming because they enjoy the work, or they do it for some other reason around their values. And it's really important to understand that if you don't treat your farm like a business, you probably won't be farming for very long. And we'll talk a little bit about that and about financial goals. But the work that I do, the business plan is almost secondary to it, in that I really emphasize farmers building their skills around the management of their business, the financials, the bookkeeping, the marketing, the sales, all of those aspects that are non-production related, that they a lot of times don't really enjoy as much. And I'm going to do a second workshop in this series where I really focus heavily on the financials and sort of how to work through that process. But the financials are definitely at the core of the work that I do all the time. And I will say, just as a caveat, I am not a numbers person. I don't enjoy spreadsheets particularly. I spend a lot of time in them. But what I do enjoy is the sense of empowerment that the farmers that I work with get from understanding the economics of their farm and then integrating those into the production practices and really taking a holistic approach to looking at their farm as a business. So today we're going to talk about the business planning process. For me, the majority of the funding for my position comes through a state program here in Vermont, which we're really lucky to have, that was started about 20 years ago. And it has a structured multi-year business planning process that is almost free to farmers. And I'm going to talk, a lot of the steps that I talk about in this webinar are based in that process. And some of the resources I'll share at the end are there's a set of guidelines that we use that are very prescriptive, and a format for the business plan itself. And it's a really great format. I haven't found one that I like more. So we'll get into that a little bit later on. But what I will say is that, so the business planning process is really about looking at your current state of your farm, and then working through some analysis to understand how you're going to get to the desired state. And so it's really, it is a process. It's got to be positive. It's reflective or introspective. I will say it's dynamic. So most folks, I think they think of doing a business plan for a distinct purpose, and we'll talk about that as well. And then they just sort of like throw it in the wastebasket or put it in the recycling bin. And ideally, that's not what's going on. And then the other thing is that you just have to be realistic in the business planning process. It doesn't do anyone any good to lay out goals that are completely unrealistic and then potentially put some financials in that are also unrealistic. So yeah, so I put this slide in because I really like to talk about when we should be doing the process of business planning. And so these are two different ways of looking at a business life cycle. So if you look at the one on your left, that's sort of the traditional business life cycle for any business. You come up with a concept, you enter the startup phase, then you go into a period of sort of rapid growth, and then usually you stabilize to some extent and then expand based on that stabilization, and then head into a period of maturity where the business is sort of running really well and you don't want to make a lot of changes, and then eventually there's a transition. And just one note sort of on that business life cycle overall is that in those three initial phases, the startup, growth, and expansion phase, that is the period where you, as a farm business owner, that's where you're going to expend a lot of resources. And by resources, I mean, capital, sweat equity, and then when the business reaches the point sort of between expansion and maturity and eventually transition, you should be really at a point where you're not expending that level of energy or capital, and you should be recovering some of that capital, either through earnings or potentially through the sale of the farm or business. So that's the business life cycle. And then the other chart, the stages of business growth, is really up here more to talk about when we should be doing business planning, right? So ideally, I get to business plan with folks before they have even started farming. We really like to try and get to folks early on in their farm career, more to instill the business management skills than to actually go through the planning process. But it's really great to have someone work through what their farm could look like before they spend a bunch of money and time making mistakes because they didn't do the planning in the first place. So ideally, we work with people when they start. But if you look at the stages of business growth, you can sort of see where the startup would be at the bottom, and then you'd have growth and then expansion. And each one of those periods of where the little change arrow is like a point of stability, and then the change happens. And ideally, that is the point where you're doing a full business plan process, right? And when I say a full business plan process, we're trying to look out at least 3 to 5 years, potentially more than that. And as you'll notice, there's a little red arrow going down as well. And sometimes the business planning process leads to a process of decline, or in this case, if there's no business plan there, that's definitely a potential outcome. A lot of times I work with exiting farmers, and they are at a phase in their business where they may not have planned for succession, and their business goes into a state of decline just because they don't have that energy or capital to maintain it like they did when they were younger. And so our goal is to try and get people to plan for those periods of rapid growth before they happen, so that there's a roadmap, both a financial and a written roadmap, for the type of growth or expansion they're they're going to do. And we'll talk about what some of the different potential scenarios are for that growth or expansion a little later in this slideshow. I'm also just going to pull up the chat here so I can see it. Yeah. All right. So one of the things to think about before you start business planning is really who your audience is in doing this process, right? And I generally work with folks who are, they're doing it for one of three reasons. Primarily, folks are going to use the business planning process for an opportunity to do some reflection on their farm business or what they're proposing for a farm business. And so they will create an internal focused document. And that's very much, I think, at the heart of our process is really trying to get folks to think about it and focus on themselves first before they focus on the external potential audiences. We do have a lot of folks who come to us either for a land purchase or an interaction with a lender or potentially for a grant application. And those are all great reasons to get a business plan together, but they also sometimes lead to the cart driving the horse. They, or the tail wagging the dog, I guess would be another metaphor where they, someone may look at, say, a grant opportunity. We oftentimes help people with a value-added producer grant, which is a sizable federal grant, and oftentimes they'll produce a business plan that is really tailored to getting that funding and less focused on how to develop out the plans for the business itself, right? So it focuses on a single value-added production enterprise and the specific funding source that is going to provide them with capital. And so what I try to get folks to do, and especially if you're in the sort of new or beginning farmer area, it's a great idea to do the work of creating an internally focused business plan that provides a template that can be modified when an opportunity arises. And we'll talk about those opportunities a little later on, but the best business plans are ones that have all the information, can be modified relatively easily, and can be tailored to a specific audience. So I will say that I try to keep folks really focused on simplicity in writing a business plan. I have worked with some farmers who have created amazingly detailed, 100+ page business plans with lots of visuals. And my favorite ones are really ones that don't have much beyond the sort of almost bullet points or really limited narrative that just explain what is going to happen. So I think really keeping it simple. And then the other thing that I'll just say as a note, if you are providing a business plan to an external audience, like a capital provider, say a loan officer, or for a grant application, really making sure to unify the voice. So either using the first or the third person, but not mixing the two. And then making sure that your business plan aligns with the financials that you've provided along with them. A lot of times, a loan officer won't even look at the business plan until after they've looked at the financials. And if your financials say one thing and the business plan says another, that's a red flag for the capital provider. So really like being attentive to it. The other thing I will say is like knowing the contents of your business plan. If you have someone else help you with it, if you go to a loan officer, they're going to ask you about the contents of that business plan. And so you better well own those contents. All right. So, like I said, we do a lot of work with farmers to build their business management skills. But at the core of our work, like the business planning process is to meet the goals of the farmer, right? So the first thing that I do with any farmer is work through a process of identifying their goals, right? If they're capable of identifying goals and creating a framework to analyze the potential paths forward, they're going to be a lot better off in the long run. So we generally, these goals I don't generally include in the business plan. The financial goals usually show up there, and some of the farm goals, and even occasionally the personal goals. But the reality is I have all the farmers that I work with through this process do these goals first. I usually ask people to do 3 to 5 goals in each of these 3 areas, and we'll get in a little bit more detail about what I'm talking about there. But these become the lens that you're going to use to look at and refine the trajectory of the farm. The other thing I will say about this is, like, these goals should be really honest. They should be reflective of what your true desires are, because if you have a farm, even if it's a side hustle, a part-time thing, or your intention is to grow it to your full-time thing, or it is a full-time thing, if you're not honest about what your long-term goals are, then you're really you're probably going to end up in a place that you don't want to end up. And we'll talk a little bit more about that. But yeah, I encourage folks to do these. I usually try to say for a time horizon, at least 5 years out for these goals. And if you are a couple or you're farming with a partner, I encourage folks to do the goals on their own and then sit down and talk about the goals together, because they're a really great way to understand if your vision is aligned or not. So the financials are always at the heart of the business plan for me. We live in a world where we have to interact with the financial system, and if we don't interact with it, then we go out of business. So I put this picture up. These are some farmers who actually sold their farm in the Intervale, but they had a really decent farm operation. They grew on just about 2 acres, but were able to generate a really decent family income out of it. And they had really clear financial goals. And one of the first years that I worked in the Intervale, we had some really severe flooding. So it hasn't happened in almost 10 years now, but every so often we have these flood events that wipe out almost all the farms in the Intervale. And this particular year that I met with these folks, we had a flood event on July 3rd where we had quite a bit of rain in a really short period of time, and it flooded all the farms in the Intervale, and it wiped out almost all the growing crops. Usually we have seasonal flooding in the fall and the spring that doesn't impact the veggie growers because they haven't planted yet. And it wiped out everybody's crops. And these two, we had 3 farms go out of business that year. But these two were really clear about their financial goals. They immediately went back and figured out how they could salvage the season and go back and replant with high margin crops. And they did it, and they actually had the most profitable year they had to that point. So they were really clear about what they needed to make in terms of money, and they figured out a way to do it. They pivoted really quickly, and this is the same type of process that we see, or I've seen with farmers through COVID the last few years. If they're clear about their financial goals and market shifted, they were really quick to figure that out. The other thing that I will say about these folks is they were clear about the need to build equity, and we lease land to farmers, so they can't build equity in their land, but they were able to do it, in in other ways. So, I think the things like when we talk about financial goals, being really clear about what's going to impact those financial goals. I think younger farmers oftentimes don't have children yet, but children, for those folks that do have children, know that they tend to cost a lot of money. So I often ask people, is that your intention? Sometimes folks don't want to have kids. That's fine. But if they do, really working that into the farm plan. Retirement and retirement savings, especially if you're on leased land or you are unable to build equity in land or equipment, is really important. And I will say that I'm going to probably talk about this more in the financial one, but tax avoidance is something of a sport amongst farmers, maybe more so among the commodity farmers or like older generations of farmers, but they do this thing where if they make money in a year, they'll go and they'll buy a piece of equipment to depreciate it in a single year so they won't have to pay income taxes. And they may or may not need that piece of equipment. And I tell those folks, like, you also can receive those same tax benefits from just making an investment in a retirement account. And the other thing is that if you spend your life trying to avoid taxes, whenever you go to sell those assets, you have to pay taxes on them then. So tax avoidance is sort of just kicking the can down the road. I will say I put the picture of Disneyland up, or Disney World up here, because I worked with a dairy farm. This is also relatively early on in my career, and they were really clear about, they had a financial goal that they wanted to take their kids to Disney World once a year. And they just wrote that into their plan. Now, a lot of times they did it on credit cards, which was not a great idea, but it was just a non-negotiable for them. That was what they did. That was their one vacation a year, and that's what they wanted to do. So I do not, I do not give advice in my role as a business planner. What I do is provide people with information and allow them to make informed decisions. And that was their decision. But they were really clear about it. All right. So real briefly, and we'll get into this a lot more in the financial piece of this, of the next webinar, is, this is sort of the like 1,000-mile view. Like, we're looking down, and this is the basic formula for understanding how to set your financial goals, right? Like, you really need to understand the financials of your farm. This is for those of you who do spend time in financials, this is sort of really simplified profit and loss or income statement with some stuff happening below the line, so below your net farm income. But basically, if you're not doing this process already, this is where to start. It's like, you need to know your financials well enough to know if you're making money or not, right? Know what your gross income is for the year, know what your expenses are, and then know what the net income from your farm is. And also know the implications of things like debt service, which generally does not show up, or the majority of it does not show up in your profit and loss, just the interest portion does. And then also things like depreciation. So while depreciation is a tax-based concept for most folks, depreciation happens in the real world. And so I would say under debt service here, the fact that you're going to need to replace things on your farm, whether it's equipment or infrastructure, that also has an annualized cost that needs to be reflected. And then what you get to at the bottom is sort of what your financial goal is. You want to know how much you want to earn in a year, how much you want your farm to contribute to your family's income, right? And so, and when we do financials, and we'll talk about this in the next webinar, we do the farm financials, and then below the line, we include the family's full financials as well. So we include off-farm income, we include debt service, we include a family living expense line item that comes from a family living budget. And you'll see that reflected in the financial workbooks, which are on our resource page that I'll put up at the end. But we will get more into this in the next webinar. But I will say, being really honest about your financial goals, it's okay to lose money in the first few years of operating a farm. I don't know if I've ever worked with anybody that made money right out of the gate. But if you are 3 to 5 years in and you're not meeting your financial goals and you're really struggling, then it's important to go through the planning process to really understand how you're going to achieve those financial goals, and if you're going to be able to achieve them. Because if you don't, you're just going to end up really struggling over the course of your time farming and end up being disappointed and probably end up needing to exit at some point because of the level of debt that you've assumed. I work with some farms, especially dairy farms in our state right now, are really struggling, and they accumulate a huge amount of debt that doesn't allow them to meet their financial goals, and then eventually leads to things like the sale or bankruptcy process for a farm, which is never fun. So, farm goals. So the farm goals should be sort of mixture of like production and environmental goals. I think the best farm goals are really, they relate to the scale of the farm. They relate to the types of production that happen there. I put up this picture. These folks, I've worked with them off and on over the years, and they, the farmer on the left there, she and her husband got into it because they really wanted to develop out a diversified farm. They had read Michael Pollan's book and The Omnivore's Dilemma and moved to the country and started this diversified farm. They had beef, sheep, chickens, you name it, they had it, and pigs. And they and what they did over the years was they sort of like started to drop some of those enterprises. They dropped the sheep, they dropped the pigs, and then they eventually ended up identifying that the chickens were marginally more profitable, and they definitely had more of a cash flow. But so they just sort of over time grew the chicken enterprise, and then they got to the point where they bumped into some federal regulations and they needed to install a processing facility. So they bought a portable processing facility that's in a shipping container. And then they had to scale up to be able to utilize that piece of infrastructure to the point where it made sense for them financially. And so now I think they're processing, I don't even know how many chickens a year, but so they process other folks' chickens as well. And I think I put this up here because I know that what they really like to do is produce animals. They like to graze animals. They like to, deal with livestock. And what they are doing right now is managing a processing facility primarily. That's where they spend the majority of their time. And I think if they had been really realistic in the planning process, they may not have gone in that direction, because it really it's a challenging thing, and processing animals is a really different, it's just a really different business model than being a livestock farmer. So I think being really clear in it. Another one, like a great example of a farm goal, I worked with a farm couple also relatively early on in my career, and you know, they had two goals that I can remember really distinctly. And the first one was that I asked them, yeah, we'll get into that in the next set of goals. But in terms of farm goals, you know, they were farming on one of the farmer's family's property, not a great property. They do vegetables on a really small acreage and do it really well, and it's actually quite profitable. But they had about 50 or 60 acres that they needed to utilize in some way, and they had goats, they had milk goats, and the goats weren't putting a dent in that acreage. And so they actually sold the goats and got a beef herd, because one of their goals was really to be environmental stewards of that property and keep the land open. So by creating a beef enterprise, they were able to meet that goal. They acknowledged that it was really like a break even at best enterprise, but the veggies created the profit for the financial goal, and the beef, they also both really like livestock. And so the beef allowed them to maintain the open land on the property in a way that was more more useful and environmentally friendly than just mowing it on an annual basis with a brush hog. And then, so the last one is really, it's personal goals. And I think that these, I try to get folks to really focus on quality of life, and I feel like they're the most important part of this process. They are, you know, being honest about what quality of life looks like. Sometimes that can be attributed to like generational differences, but I think that most folks would say like they don't want to farm 7 days a week, 12 hours a day. And depending on the type of the farm, you may end up doing that. And that's okay, as long as you're clear that that's what you want to do. So that same couple that I was just talking about, they were funny because when we got to the quality of life portion, they were like, well, we want a day and a half off per week, even during the season, during the growing season. And they actually achieved that goal really quickly. But the reason it brings a smile on my face is that I asked them if it was going to be a day off together or a day and a half off together or separately, and they had different answers as to what that would be. But I think the other one around, so for personal goals, I also encourage people to really think about, a lot of folks who start farming full-time have the desire to work full-time on the farm at some point. And I often, especially when I'm working with couples, have them really think about the implications of that and whether they want to farm and live together full-time and maybe not have a break from each other. I think that that's also just an important consideration. And then also in this bucket, I would put professional development goals. So if you are a farmer and you have an area of growth that you would like to explore, this is a great place to articulate that, whether it's related to the production of your farm or anything else. Just articulating it in your quality of life goals puts it out there so that you have the opportunity to both identify it and then hopefully achieve that goal. And so these series of goals, like these are things that I have people do in a separate document. They live in their document where they can revisit them at any time. And we do potentially pull like those financial ones or even the professional development ones or the production farm ones out of those goals and add them into the business plan. But a lot of times the majority of these don't actually end up in the business plan. So before we get into the actual business planning process, I just want to make a really important note here about personality. And this is something that I've experienced over the 10 years of doing this work. Your personality is going to impact the trajectory of your farm. So I am I'm someone who, like, I'm an introvert. I have taken the Myers-Briggs, which some of you may be familiar with, which is a personality inventory. And I feel like folks should be really, really cognizant of their personality and what they're proposing to do in their farm. I put this up here because, if you are proposing to do direct market sales as part of your farm business model, it's very helpful to be good with people. A lot of times farmers get into farming because they like the production elements of farming. They like to be with animals, or they like to grow vegetables, and they don't get into it because they like to interact with people. And I know from personal experience, I used to go, I worked for a farm. I would go to the Burlington Farmers Market and sell cheese. And I was there, the people would be like three to four rows deep at that booth all day long. And at the end of that day, I would have to go home and basically recover for like 3 days, because I'm an introvert, and talking for 6 hours straight to strangers is a little bit of a challenge for me. And so I put that out there because if that is what, if you're proposing to do direct sales at a farmer's market 3 to 4 days a week, and you're not, you're not really into sales, or you don't like interacting with people, I would really push back that may not be the best business model for you, even if it has the highest margins in terms of your product, right? The other things that I think are really impacted by personality type are, a scale of farm can really dictate whether you have to manage employees or not. And employee management is something that some people really enjoy, but the majority of people don't enjoy so much. And labor is a real big concern on farms, I think, nationally right now, just with a really competitive job market and the potential work conditions of farming. And you have to really be committed to and love the process of farming. And so if you're trying to manage employees that they're not an owner like you, and they may have a different expectation of what they should be doing at work, it can be really challenging. And then the last thing I will say about personality is there's a spectrum of risk for producers, and each individual has their own spectrum of risk. I usually think about it as it relates to either production or especially to the financials of a farm. Oftentimes I work with farms that are scaling up, and they can accumulate quite a bit of debt during that process. And I know that I'm relatively conservative in terms of my tolerance for risk. And so I think just being aware of your own tolerance for risk, and really checking if a decision is a good one based on that tolerance for risk. So if you know that you're an inherent risk taker, maybe finding someone with some other perspective who could talk through that decision with you and just reaffirm that the information you're using to make the decision and the potential outcome is realistic. So some people really take risks. I was actually telling Eric before we got on the webinar that a farmer that I work with, I talked to him yesterday, and he just bought 80 bred goat does, and they're going to show up today. And we had not written any of that into the plan, but that, he just has a different perception of risk and a tolerance for risk than I do. All right. So, these are some of the things that you may be considering if you're here on this webinar, you're thinking about business planning, strategic planning, why you would do a business plan, right? And each of these I think they're all pretty much high risk activities. Like starting a new farm business is really risky. I think over the 10 years that I've been doing this job, I would say probably half the farms that I've worked with have gone out of business in that time. a lot of times, folks from the sort of business community will ask me if I think farming is higher risk than other businesses, and I don't inherently think so. I think the environmental risks associated with production may make it risky, but I also think of, businesses like the restaurant business. And in terms of the types of farms that I work with, I usually put people, if I had 10 farms in front of me, 2 of them would be doing really well and would be really managing their farms as a business. There are like maybe 6 in the middle, and then there's 2 that probably should be out of business or will be out of business in the next year or so. A lot of you are probably thinking about these. There's different processes for planning for each of these, but I think overall, if you are considering any of these, having a business plan that addresses the trajectory that both leads to this and then goes beyond it. A lot of times we will do a business plan for someone who's thinking about purchasing land, is a really big one, moving from a leased property onto a purchased property. And we will do a full business plan based on that specific property, the markets, all the different elements that we'll talk about in the business planning process. And then they close on the property and they move there. And then we take that business plan and basically rewrite the whole thing, because it's one thing to look at and evaluate an opportunity, and then it's another thing once you've achieved that goal, and then you need to be really forward thinking about where you're going to go beyond that opportunity. So ideally, we plan for beyond the opportunity, we get there, we do a little bit of work, get somewhat stabilized, and then plan again. So I put this slide up here. A lot of folks, especially when you're farming, people approach you or you perceive an opportunity that is or could not be an opportunity. I think if I was to do an updated version of this, I would say that in the past few years, at least in Vermont, in our current environment this year, adult use cannabis was just legalized, and there's a perception of it being an opportunity out there in the world. A few years ago, it was CBD hemp. And I put this one up here because I'm not sure if there were alpaca farms. There probably still are alpaca farms in New Jersey. I apologize if there are any alpaca farms on this webinar, but there was a period in the early 2000s in Vermont where folks were moving up here and starting these alpaca farms because they had this perception of an opportunity. Now, alpacas have wonderful fiber. And they're kind of odd animals, but some people like them. But if you look at the chart here, the sales of those animals were not at all related to the actual reality of that opportunity. And so there were folks who were paying like $70,000, $80,000, $100,000 for a breeding pair of alpacas, and it had no bearing in reality. And it was a total like pyramid scheme, and it eventually collapsed. There were folks around here who had sunk their retirement savings into a property and a bunch of alpacas that had basically no value. And so I put it up here because I think it's really important the way I evaluate an opportunity is I look at the level of buzz around it, sort of, are there a bunch of people moving in that direction? Who are the type of people moving in that direction? And then does it seem like it's realistic? And I think it was that way with CBD too. We had a bunch of farms here that put a huge amount of capital and resources into producing CBD hemp plants. And then I have numerous times in the past few years walked into a building on a dairy farm or something, and there's still a hemp crop from 3 years ago that's drying because even if they did have a quality product, they eventually did not have a market for it. So, and I will say that if you're evaluating an opportunity, try to be as diligent as possible about that. And we'll talk a little bit more, but you probably want to do almost like a mini business plan and an enterprise analysis for that opportunity. And I also think it's important to really try and think about those opportunities within the context of your long-term goals. So if you are, if those folks who were livestock farmers and put the chicken processing plant up, if they came to me and said, well, we're going to move to alpacas because we think we could make more money at this point in time, I would say, well, let's look at what that whole process looks like. Let's try to see it out all the way to the end. And we'll talk about that a little bit in terms of the business planning process. But the best farmers, even if their intention is to stay farming for the entirety of their life, have some sort of exit plan in mind for their farm. All right. So the other thing when we're relating it to opportunities is really thinking about your market, right? So, and we'll get a little bit more into the market analysis piece of the business plan, but one of the first activities that we have folks do is really just do a litmus test of what their market is, like what the potential market could be. And it would be the market for the proposed product that you're going to produce, whether it's a straight crop or it's a value-added product, and understanding like the depth, the price point, and the competitors. And I'll share a resource with our, we have a sample business plan that has a really nice marketing, it's a marketing matrix in the market analysis section that goes into the depth of that market, the attributes of the potential customers, and the products, price point, and competition. And the reason I put this up here is that, we work with some folks in the New American community, and over time, we actually had a program at the Intervale probably almost 10 years ago now, where we really we were working with some of the New American farmers to grow crops, and so we tried to help them develop or enter into markets with crops that were that we perceived the market to need, like that other farmers were growing and that the wholesale buyers had stated a need for. And what it really ended up being was that they eventually didn't like that market. They didn't like growing the crops, and they actually went and found their own market. So they really, like, the New American community has a number of different markets that they sell into, and they were able to create viable businesses, but they had to do the work to understand what that market needed, and then they developed their businesses around that, and that took a significant amount of time. But if I had to say, one indicator of success with the farms that I work with, it's how diligent they are in attending to the process of understanding their market, right? Understanding your financials is very important, but being able to understand who your customers are or your potential customers are, and then really understanding the depth of that market is the thing that is going to make you most successful. I work with some farmers who are amazingly good at pivoting. When they bought their first farm, I sat down with them, we created a potential market list, and I went back and met with them a week later, and they had called everybody on that list and asked them what crops they would like to buy, how much they would like to buy, what their price points were. And that same farm, they own 2 farm properties. They farm on about 150 acres, and they have a retail market. And during COVID, they were able to pivot amazingly quickly and have just, they're actually thinking about their exit plan now, because they've been doing it for 10 years and they grew their business to the point that it's now a saleable business. So this is where we actually get into the business planning process. So And in the resources at the end of the PowerPoint, you'll see there's some links. I can drop them in the chat as well. And they are, we have resources on our website at the Intervale. We have a resource page, and we have a sample business plan that we developed for new and beginning farmers, which has financials attached to it, and we have some financial workbooks. But the structure of that business plan is what I'm going to talk about here, and the way that you're going to work through the sections of the business plan. And if we go back to one of those initial slides in the slide deck, what we're really trying to do is work from a current state through a series of analysis into a future state, right? So that's just the way to think about the business plan itself. When I do this process with farmers, I actually have them work through it in sort of a non-linear progression. And I think if you do this on your own, it's really important to think that your goal is not to work through it like in sequence, but maybe to work through it and then go back and refine a section, right? Like you may do the work of getting the current state is actually relatively easy. But then when you get into the analysis and then the forward-looking business ideas and strategies, that's an iterative process. It's almost like cyclical process where you go and you work through, oh, I'm going to think about that idea. Maybe my farm can go in that direction. Maybe I can add this crop. And then you're going to go back to the market analysis and say, I need to do a market analysis for that specific crop, right? So that really, and ideally, over time, you'll do that both on an annual basis. You'll do your annual planning, which is a process of financial planning in the later months of the year before you are thinking about tax planning. I encourage people to do, and this is just a slight divergence from the business planning process, but you should be, creating financial projections and really thinking about where you're going in the next year in October or November so that you can do any tax planning and I will say actually through COVID supply chain issues, the people who are really good business managers, that allowed them to get ahead of some of the supply bottlenecks that plagued producers who are not as good at doing that annual planning cycle. But ideally, when you're doing that annual planning cycle, you're revisiting your business plan a little bit and just working through, where was I going to be in this year at that time? Am I there? Do I need to modify? So that's sort of how the business planning cycle intersects with the annual just planning cycle that every farmer should go through, like when you're doing your crop plan or when you're ordering chicks for your poultry farm. Like, you should be really thinking about the other work that you need to do to inform the potential changes or growth in the next calendar year. So we're going to talk a little bit about the current state, and the reason that we do this is that it provides perspective to the farmer. Like, I can't tell you the number of times. It also provides perspective to any potential audience that you have for the business plan. Like, if it is going to a loan officer, they're going to want to see your infrastructure listed out there. But it's also just a great way for farmers to really take stock of what their current state is, like what the resources they have available to them to grow their farm business. So for us, in our farm description, we have a lot of folks who they'll do a little narrative about who they are, the history of the farm. They will include a list of the physical assets and sort of a description about their quality and potentially their utility as it relates to the farm production. A lot of the work that we actually do is around also like ownership structure and legal work. So including that in the farm description is important. You want a loan officer to know if you're an LLC or if you're a sole proprietorship. Soil types are one of the key things that I look at as an indicator of success for a farm, and we have really good soils at the Intervale Center, and that allows our producers to be very productive. If I read a business plan, I want to know if you have the soils to do what you're proposing to do. If you're a vegetable farm and all you have access to is clay soils, that is probably not going to work. So yeah, just thinking through what the information is that you as the farmer need, or the reader needs. A lot of times when folks are doing a business plan for a farm purchase, we'll focus heavily on the soil types. We'll actually potentially include some of the other things around the farm description, like what the zoning is for that specific property, or if there is housing, or what the well is like, the flow rate on the well is like. So it's just a good way to explain the resources available. Then we move into the products and markets section of the business plan. This one is really just an explanation of what you're currently selling or producing, right? So I like folks to include things like, if they're a vegetable producer, a crop list with current pricing is really nice. I like to see a list of wholesale buyers or farmers markets, things that explain where they're selling their product and at what price point. It's good to know volumes as well. Like a lot of times for livestock producers, I'll have them put the number of animals that they have, both as breeding animals, and then also that they harvest in a calendar year. And so that's nice because it potentially shows the trajectory of a farm in terms of the growth of that specific enterprise. And this is not to be confused with the market analysis, which we'll talk about a little later on. But you do want to explain your current marketing activities. So do you have a presence on social media? Do you have a website? Do you sell through your website? And really just talk about the current state of the farm. And this all provides a point of information for the market analysis section, which we get into a little bit later. So the SWOT analysis is for me at the heart of the business plan, right? The SWOT analysis, it's strengths, weaknesses, opportunities, and threats. And this is actually one that I have folks, I have them do the current state and the SWOT analysis first. So they do their goals first, then they do these portions of the business plan as the initial part of the business planning process. The SWOT analysis informs where your farm is going to go. And so the SWOT analysis, the strengths and weaknesses are internal to you or your farm. Good examples of this, like strengths, would be, I have 15 years of production experience raising dairy goats. If you're gonna, start a dairy goat dairy, or a weakness for that person could be, I've never made goat cheese in my life. And if they're proposing to make goat cheese, that would be something that they would need to address. I like my SWOT analyses to be really concise and transparent. I like people to have usually like anywhere between 3 to 7 in each area. I have had people come back with a page of strengths and a page of weaknesses and a page of opportunities and a page of threats, and they get too granular and they can't be applied to the later portions of the business plan. I will say, so in the transparency piece, like if if one of your weaknesses is that you lack capital, you should put that in there, because if a loan officer reads it, they have a credit report which shows that you have a lack of capital. And by identifying it and acknowledging that it's a weakness for you, that actually almost makes it a strength. And in my eyes or in their eyes, it's like this person knows that they're going to need to access capital in some way, and they need to address that in this business plan. So that once again, the strengths and weaknesses are internal to you and the farm business. So they can be things like land-based too. If you have, wonderful vegetable soils, you would put that in. If you have clay soils and you're a veggie farmer, you would put that in the weakness column. And then opportunities and threats are external to you and your farm business. They're things that, potentially impact the farm business. Like opportunities a lot of times have to do with markets. So, if there's a perception of a market opportunity, that's a great place to put that in there. Threats are, it's good to try and be specific with threats, but things like climate variability obviously is a huge threat for all, anybody who is producing, even indoors. Like if you're in a greenhouse complex, you are still going to be impacted by climate variability. And so identifying it as a threat and then addressing it throughout the business plan is a really important thing. I actually did have a producer who, and I have to go back and find this plan, but they identified like essentially a pandemic as a threat. And this was pre-COVID. And I thought, this is just a crazy, crazy thing. And they were right. So, but I think identifying these things, well, you'll see how they interact, but ideally, this is the first of the analyses. The other ones are really more targeted, but this one is going to inform the forward-thinking portion of the business plan or the business planning process. So spend some time on it. I also, if you have, once again, if you're part of a partnership, a couple, or it's oftentimes good to have folks do this independently and then come together and compare notes. And sometimes they're aligned and other times they are not. So management analysis, this is a good one to put in there, especially if, and this goes into the forward thinking portion of it, if you're planning to do something that is very different than what you're currently doing. Like if you're an owner operator scale and you're scaling up to a business where you're going to have, you're going to grow to need management level staff. So the management analysis is sort of like who does what, where, when, and why, right? That's, and I like to have folks do, talk about who's doing what, go through those lists of responsibilities. It's a great one to have people actually, if you have the capacity or time to go and develop job descriptions, this is a wonderful point to do that. I also like if it's a slightly small or a slightly larger farm, I'll have people do an org chart. So they'll like actually do a visual representation of who's doing what on the farm. And then this is also a great place to identify the gaps in the management of the farm. So even if you're an owner operator, this is a great place for you to say, well, I'm currently keeping all my receipts in a shoebox and I need to move into QuickBooks or something like that. And then you can identify what the professional development needs are that can inform the forward-thinking portion of the plan. So management analysis is great. A lot of times I do succession planning for farmers, and I will ask either the buyer of the farm, or if it's a family transfer, the successor, the younger generation, to develop out a management plan for the future when the exiting farmer is no longer there. And it's a really wonderful exercise. The other thing I will say that can oftentimes come out of a management analysis is like an operations manual or a SOP manual, a standard operating procedures. And if you have a farm that you intend to have employees on, that's also a great exercise to really develop a structure around the operating procedures so your expectations are really clear with your staff. production analysis. So this can go into, it depending on the type of farm, can go in a number of different directions. Usually it's sort of talking about the current means of production and technology that's used in that production, and what the core issues that could be addressed by a change in that type of production. So I put this slide in here. I worked with this producer. This guy produces only sweet potatoes and has grown it to a really, it's a really decent little family-owned wholesale sweet potato farm in southern Vermont. And he spent a lot of time on this portion of the business plan, and over the years has made really significant investments in the type of production equipment that he uses, and it's paid off in spades. And also, I will say, processing and storage, because sweet potatoes are a very unique crop in terms of their processing and storage needs, and that was what allowed him to grow his market and sort of outcompete other farmers that were doing sweet potatoes as a portion of a diversified farm. So the market analysis, I talked about the market and knowing your market earlier. The market analysis is a key. It is a really key, important part of the business planning process. I prefer having folks do a marketing matrix that places them within sort of a spreadsheet that has, the customers, the core attributes that they are, that their products have. Like if we're doing that competition analysis, you would have your farm at the top, and then you would have all your competitors listed below it. You would say the attributes: are they organic? Are they regenerative? Are they grass-fed? All those different attributes. Pricing, what types of things you're going to do in terms of market differentiation. So one of the big issues in our state is that we have a lot of commodity dairy farms, and for them to go out and start a value-added processing plant where I'm working with one right now. They bought a bottling plant and started selling milk, but the problem is that their milk is just like everybody else's milk. It doesn't have any differing attributes. Assessing the depth of the market, and depending on where you're proposing to market your product, this can be as simple as calling up your top 5 customers and saying, how much of this product can you take? Are there other products that you would like? And is there a ballpark in terms of pricing, or do you want to know my pricing? We'll get into pricing in the financial one, but you should know your cost of production, and you should know how much you need to make in terms of a margin to be able to be profitable, to hit that financial goal. And then you should be able to talk with your customers about that. Because if you need a higher price point, the depth of your market may not be the same. So, and you need those things to align. The last thing you want to do is produce a lot of product that you can't sell, especially at the price point that you need to sell it at. This is a great point to talk about a marketing plan and develop a marketing plan if you don't already have one. And that can be, those can be really simple depending on where your proposed markets are, up to, fairly complex and getting into online advertising and online sales. But it should be commensurate to the sort of scale and relative complexity of the markets. Like if you're a small scale diversified farmer that markets at a couple farmers markets, you really focus on interacting with those customers, getting their information so that you can communicate when they're not at the farmers market, like either through MailChimp or through social media, and then just doing the best job of creating a farm stand experience that's, that will bring them back, like having the products that they want displayed in a really wonderful way. So yeah, it should be appropriate to the scale of business. If you're proposing to do a few $1 million in sales, then you should have a marketing budget and potentially someone who is dedicated to sales and marketing. So this is where we get into the forward thinking or looking portion of the business plan. And this is honestly probably the most fun part. Like, this is why people do the business planning process. You know, like, I like to break the business ideas and strategies, is this what we call a section. I like to break them into short term. So 1 year, like what's going to happen this next calendar year, intermediate, which would be 2 to 5 years, and then long term would be 5 years plus. And so short term, a lot of times, that's things like, you know, improving bookkeeping or moving into QuickBooks, or developing a marketing plan. Intermediate would be things like, oh, we're going to explore a value-added enterprise, like we want to make pickles with our cucumbers. And so it may not be something that you have the capacity to do in that calendar year, but maybe when you're doing your planning the next year, you're very intentional about looking at that specific enterprise. Maybe you grow some cucumbers in the current calendar year that you know are the type variety that you would want to make the pickles with. You do some experimental batches. You know, some folks that I work with do co-packing. Actually, the farmer that I'm talking to in this picture, I have a great story about him where I showed up and he was fishing like cucumbers out of a 5-gallon bucket into another container with a plastic bag over his hand. And you know, that was in the infancy of their value-added production, and now they have a full commercial kitchen, and they're very you know, that portion of their business is doing really well. But so just thinking about them in terms of those buckets, the long-term ones are going to be really they're going to be sort of around like exit planning or the potential sale of a business, or maybe that's the one where you know, you move to more management level staff, things like that. But they all build upon each other. So to think about these, this is really where your business is going to go, right? So if you're like thinking about those goals that you articulated at the first part of the process, those are the filter that are going to, they're going to be represented in these business ideas and strategies. I like to have folks do these where there's like a little heading, and then there's a really concise narrative, like a paragraph or two, that provides the context for that heading. So if it was, you know, a big one would be like, so do a land search for my forever farm, right? So if it was like, conduct a land search, and then the narrative would say, over the next 12 months, I will work with these entities or this realtor, and we're going to identify the characteristics and look at, it's nice to actually add in some quantitative metrics in here. So like, we're going to look at 5 properties, and these are the specific characteristics of those properties. The next short-term business idea and strategy there would be to connect with lenders. And then it would list out like, we will have a business plan prepped, and we will contact 3 lenders over the course. And what, you know, if a lender sees that in a business plan that you're handing in for a loan application for a farm process, that is going to have a really positive impact on them, because it shows that you have been thinking about this. You're really forward thinking, right? Like, I have farmers who are at the beginning of their farming. They're, you know, maybe just beyond the concept phase, and they'll actually articulate, I want to buy a piece of property in that 3 to 5 year range, and they will put in the short term that they need to have a contact with the loan officer at FSA or whatever the local ag lender would be, to develop a relationship with that lender, either by taking a small operating loan or even just having a conversation to say, I am going to come to you with a request for a farm purchase loan at some point, and I want to know what you want from me in terms of information. The other one would be like, file farm taxes. So you have 3 years of farm taxes before you go in for that farm purchase loan, because that's something they'll require. These should address things in the SWOT. That's why we do the SWOT. So, that, like, if one of your weaknesses is limited capital, then you want to address that in the business ideas and strategies. So you want folks to know, you want to talk about how you're planning to access the capital to be able to purchase a farm. I like these to be limited in scope. So don't add everything in here, just add in the things that you think are realistic and you have the capacity to implement over time. Those ones that are further out, like the 3 to 5 year window, and then the beyond 5 year, you can be a little bit speculative about those, but I would just try to limit the scope of them. You may want to explore value added production at some point. You may not add that into this specific business plan if this plan is focused around the purchase of a farm. It may be in the back of your head, it may be in your goals that you laid out at the beginning, but it may not be in this specific business plan. And then you want to articulate what success looks like. So you want to articulate what it's going to look like to achieve these goals. I was talking with a farmer yesterday, he has a sort of business working with other farmers, maintaining their specific crop that he works with. And he was great because he was like, you know what? I'm going to put the exact number of folks that I want to contract for my services in these next 5 calendar years. And so he actually articulated that out. He also has applied that to the financial portion of the work that runs in parallel with the business plan. So, if he says, I want to grow my business by 50% a year, and I know that I need 5 customers that are each contracting for $10,000 of my services, he has put that in his business ideas and strategies, which is really great, very clear, attainable, and it feeds back through that cycle of looking at the market analysis and who his core customers are and how he needs to market to them, and if he needs to allocate some dollars to specific targeted social media marketing campaigns. And he's doing a great job of that. He's definitely going to be successful because he's been great at articulating it, and he's been great at articulating the process and what success looks like, so he can go for it. And the other thing I'll say there is he has a really potentially challenging product to sell, or the service that he sells, and he has no idea of the depth of the market. And there's no comparable service, so it's really hard to understand that. So he's essentially making guesses, but what he's also done is identified alternative services that he could provide using the equipment he's purchased for this business. And he's going to develop those out so that if he needs to move into those service areas, he'll have everything ready to go if he doesn't meet his target in his core service area, which is really cool. So the implementation plan is sort of taking the business ideas and strategies and just laying them out in sort of a calendar format where I like folks to do 12 to 24 months, either in a monthly or a seasonal format. It's almost like creating a punch list, because a lot of folks, you do your business planning in the winter. That's my busy time. And so once you're in the season, you don't want to think about this at all, right? But if you're proposing some changes on your farm, or you're proposing to grow an enterprise, if you have a really concrete punch list of how you're going to get that done as you're going through the season, if you get into the chaos of the season, you don't need to think about it. You already have it laid out. Like, this is, we're going to start a bedding plant business. So, we need to order all of our bedding plants by January. We need supplies for the ones that we're going to grow by January as well. We're going to start greenhouse number 1 on, February 1st, and we're going to plant these plants in there. And then it aligns with your crop plan. Have your crop plan done by January. Do your seed order, and it just lays out all those things. So when you get to June or July, all you have to pay attention to is the day-to-day operations of your business and whether you're hitting your financial goals. And we'll talk about that at the next one, but you want to have the steps laid out. It assigns responsibility. So if you have other staff doing this, or say you're doing it as part of a partnership, those folks are clear in who's responsible for what, and what area of the specific task, and it's laying out the specific business ideas and strategies so that over time you understand what you have to do to get there. The other thing I will say about this one is that they need to align with the financials once again. So this is an area where, and we'll talk about this in the financial workshop, but having a capital budget that really aligns with your implementation plan is super important, right? So if you're proposing to go back to making pickles, if you are proposing to build out a value-added production space, you need to have the implementation plan that talks about we'll get the permitting in March, we'll have the budget totally finished by the same time, we'll have the contractors lined up so that we can break ground on June 1st so that the facility can be built by the contractors by August. We can have it finished by September so that we still have time to process those crops. That's probably a little late for pickles, actually. So, that would force you to work back. And then you want the capital budget to align with that. So you want to have an understanding of where all those funds are going to flow from, how they're going to be utilized, and and who's responsible for that portion of it. So, so that's the business planning process. If you look at the business planning documents that we have, and I'll put up this resources slide, and maybe one of the other folks, Eric could drop it in the comments, the contents of this, or I will at a later point. But so we have a number of resources that we've developed over time. The program that provides the funding for my work, the Farm and Forest Viability Program, has resources on their webpage. They're a little bit hard to navigate to, and they're designed for farmers who have been in business for a number of years, and their financial workbooks are quite complex to work through. But they do have these business planning guidelines, which are really wonderful to look at. And we have a resource page we've developed over a number of years, resources around a lot of topics that impact new and beginning farmers. We have a sample business plan there. We have a couple of different financial workbooks. We have a couple of different feasibility studies that we did, one around grass-fed beef and one around layers, which have scalable budgets that you can take and work with. And those are all really great resources for you if you want to just test out business planning, see what the business plan that we have there. The sample business plan was based around a real farm. They're hypothetical folks, but it's actually a land base that that some farmers actually, that there was a picture of them, they ended up buying, and they ended up growing their farm business on. The other one I would really highly recommend is the Organic Farmers Business Handbook. That was written by one of my mentors who sort of taught me the business planning process. His name is Richard Wiswall, and he has owned and operated an organic vegetable farm in central Vermont for the last 40 years probably. And he really started the process of like managing his farm like a business and got really into the financial analysis end of things, and then realized that he wanted to do the work of, or I think probably was requested of him of other farmers to help him through their business planning. And so he wrote this business handbook, and it actually works you through the business planning process. He's got a really wonderful way of framing it in that handbook. It has some really relatively complex financial workbooks associated with it, which can be somewhat challenging to work through, because he actually does a process where he doesn't do it anymore because he's refined his business to a level where he just does bedding plants, and I think he grows burdock root for Whole Foods. But he for years he would just go through and do an economic analysis of the vegetables he was growing, and he would set a point in his spreadsheet where anything below that in terms of its profitability, he just wouldn't grow the next year. So somewhat ruthless way of looking at growing crops. And then he could grow things if he wanted, but he wasn't going to make them a major portion of his farm. If he was going to lose money on, say, growing corn, he didn't want to grow a ton of corn because he knew that it was losing him money. And so he just did that annual allocation of what those crops profitability looks like. So I think that's going to about wrap it up for me in terms of the stuff I have prepared, and we can go into questions. Thank you, Tess. All right.
You got it. Yeah, thank you so much. I took some pretty rigorous notes. Thanks for all this. But I loved when you talked about like, I farmed for so long, just kind of like trying to figure it out as I went along, and not having a really concise business plan made me really scattered, and like there was no such thing as figuring it out as I went along. Like that for the growing part of it, yes, but for the actual financial and business part of it, it was really difficult. So this is a great way for people to kind of like get a framework on like how to do that. So thank you so much for all of this. Like, and I wrote down too, like having the sense of empowerment from understanding like all of these aspects of your business plan, like that's huge for people, I think. So thank you for kind of rooting us in that before we went through the whole thing. That was really,
I will
cool.
say, like I said it before, I'm not a financial person. Like I don't like spreadsheets. I still don't. I spent the day in spreadsheets yesterday, and by the end of the day, all I wanted to do was like just go outside and dive into the snow, because it's exhausting. But what I'll say about the business planning process is that no one is born knowing this stuff. It's like riding a bike, right? I have a 6-year-old who does not want to learn how to ride a bike. I have an 8-year-old who loves to ride a bike, and she jumped right on it and learned it. But the 6-year-old is like the equivalent of most farmers in business planning, right? She gets on it, and I give her a shove and she falls over, and then she gives up. And that's not the right approach. Like the right approach is to like get on it. If you fall over, get back up. And that should be your way with farming too, right? And maybe you don't like to ride a bike and you figure that out somewhere along the road, but it's like you have to practice it to get there. And so business planning is like practicing the management of your farm business, right? And doing it in a way that it really reduces the risk. If you do the work of planning, you do the work of the financial planning that aligns with it, you know, you have a much higher likelihood of success, and also not having these things like where you burn out because you're like, why? I've been doing this for 10 years. And I'm working with one farmer right now who, you know, she's been farming for probably 25 years now, and she really wants to build a house, but she's never focused on the financial goals that would make that a reality for her. And it's really exhausting because she's like so frustrated, and it's like she just didn't have that goal in mind when she was doing, you know, and she has other things, like she's met some goals and she's very values based and she provides a product for her community, but she's really frustrated with the fact that she can't get this thing that she wants now. Yeah.
Yeah, something you said earlier too that stuck with me was the retirement planning process, because I mean, as a pretty young farmer, like that's just something that I never ever thought about. But it definitely was kind of like looming, you know, and it's
Yeah.
interesting to think about how putting money towards your own retirement, like you can get tax breaks for that. And I didn't realize that.
Yeah. Yeah. And a lot of farmers, like they consider their farm their retirement if they're, you know, if they're land based. And the way that our current system is set up, it doesn't work like that. Like you can't get the money out of that asset to be able to retire. It's not liquid. And so if you don't have retirement savings, then all of a sudden you're stuck making decision around probably selling the farm is usually what happens. And then, and that's heartbreaking, especially for someone who's created a place that's just, you know, most people's farms, they're magical. They're like, they're their own world, their own universe, right? That's the beauty of farming, is you get to make a place that is really wonderful. So, yeah.
And this was really great. I really appreciate the roadmap too. It's such a really great way to look at your goals about a complex situation. Writing a business plan can be daunting. And you know, often with even writing, when I tell people, they say, well, you're a good writer, I don't know how to write things. I'll often tell them, just write like you speak. But a business plan is a little bit harder than that. And I love the resources that you provide on this, on your website. There are other things, two things that I have, like, are there resources? Like I found a resource on the University of Vermont's website for one of the applicants to the SAGE program who's starting an elderberry farm.
The elderberries. Yeah.
And so many times, you know, somebody who might be starting out needs to analyze the cost, the profit of a particular crop, you know, per acre yield of a crop. How would a farmer go about looking up a per acre yield of a particular product, whether it's pasture raised chickens or broccoli?
I'll put a quick thing in the chat here around, and this is like another, we could talk about this in the farmer one, but I encourage people, if they're proposing to do something, to look at the resources around benchmarking if possible. So, and I'm just trying to find, like, I don't know what the resources are down there. The scale of farming in Jersey is like, I think you have a bunch of larger commercial farms and then maybe a limited amount of smaller diversified farms, but that's the trend. And I was just trying to, you may not be able to find the specific thing you're looking for in your region, but I think they're like, we have, NOFA Vermont has these great organic vegetable farm benchmark resources. And I was just trying to pull them up here. and drop it in the chat. But they're a really great way to just sort of look at what you're proposing to do and what the economics could potentially look like, right? So they have it for specific crops. They're like, oh, if you know, Richard Wiswall's book, like that's his whole thing, is he goes into the nuts and bolts of determining how to understand your cost of production for a specific crop, right? And in this one, a lot of times with the benchmarks, like the vegetable ones, we have dairy ones. Up here, there's some maple ones. They provide you with a range of like, okay, so if you're going to grow carrots, you should be able to grow them for 65 cents a pound, right? But the range is that some people, it costs them $2 a pound to produce, and some people it costs them 35 cents a pound to produce. And if you're, you know, if you're on the low end of that range, then you're going to be making money if you sell them at $1.35 a pound or $2 a pound. But if you're producing at $2 a pound and you're selling at $2 a pound, then you have nothing left to contribute to the overhead on your farm. So I'm just trying to, yeah, I was trying to, and I would encourage people as part of the business planning process to really like try to seek out those resources and just do a little litmus test of whether what they're proposing to do is going to be profitable to meet those financial goals. I do not see it. And I don't, yeah. Yeah, so that's what I would do. I would look for the other thing, and I don't know how many of your producers on here, you know, are vegetable producers or berry producers, but the Vermont Vegetable and Berry Growers Association has a listserv that we have like producers from all over the country that are on that listserv, and it serves as an aggregator of producers. I'll post a link to that. It's producers post a question and then they're responsible for aggregating the responses and reposting it. And the majority of them are professional producers, and it's one of the most amazing resources in terms of production that I know of out there. Yeah.
So one of the other questions I had was, I see a number of our Sage farmers on here. The Sage Farmer is Sustainable Agriculture Enterprise, which is, you know, similar to your farm, Sam, where we offer long-term leases to farmers that have a strong business plan and go through the process of an interview with our committee to get a 10-year lease. So with a retirement being the land-based farm, which isn't necessarily the opportunity for our tenants here, how would they go about succession planning or valuation of the business that they own a business but they lease the land?
So this is one that is very near and dear to my heart, in that I often get brought in to do valuation of a existing business. And we have had a number of transitions in the last 10 years at the Intervale. Of those, only one succeeded. So, and I think the reason the others succeeded is that the value, so I would encourage them, if they're on leased land, to really try to view their business as a way to generate income and not to build equity. The value of every business I've worked with the exception of one, is tied directly to the assets of the business. So if you're operating on leased land with very minimal assets, you should be making money and putting it in a retirement account. And you should expect that you probably will not sell your business for more than the asset value. And the reason I say that is that if you go through the process of valuation, and you assign, like, valuation is very subjective, and you assign a value above the valuation above asset value is determined by profitability. So the earnings of the business, and most farms don't earn enough to go beyond paying the owner a reasonable wage. And so if you sell that business for more than it's worth, the successor, they're going to have some bumps in the road anyway, because it's basically a startup in that, you know, even if they're a long-time employee, they're going to make some mistakes. And so for them, they have to try and generate their income, but they also have to service debt associated with that business, right? And if they're not meeting their financial goals, and then they have this debt that's paying against something that doesn't have any value or potential resale value, then they eventually just sort of wear out. And usually these folks, because there's no assets to the purchaser, because there's no assets to collateralize the purchase, end up having to have the owner finance the business to them, and then it falls apart in like a year or two. And I've seen that happen on a number of farms where there's no corresponding asset, and so it's owner financed. These folks get frustrated because the profitability is not what these folks promised it to be able to meet their financial goals and service the debt. And then these folks walk away, and these folks, they have no recourse. They could try and have they could try and take them to court, but these folks already didn't have any money to begin with. So it's somewhat depressing.
So for a leased land opportunity, to emphasize the financial goals and strategies behind those financial goals are really super important.
Yes. Yep. And it's like, you know, put your money into either retirement or something else, or, you know, grow your business to the point where you're gonna potentially purchase land and build equity in that. But like those folks that I put up on the slide, that they actually sold their farm, it did not work out. The successors actually left, but they bought and paid the mortgage on a house in Burlington for the entire time that they were. And arguably, it's a much better investment than ag land because it appreciated significantly. Like home values appreciate much more rapidly than ag land does. Yep.
That's great.
So I dropped those two resources in the chat, the VBGA and that listserv. There, you have to sign up for a membership, and there's a membership fee, but there is a historical archive of the listserv that is searchable, and you don't have to be a member to do that. And so if you have production questions, that's a great place to go and just type in, like, you know, what type of row cover works for these crops, or, you know, who's done this with what CoolBot. It's pretty amazing. And then the vegetable cost of production is a great little study it's primarily in the small owner operator scale vegetable farm realm. And it has it broken out by specific crops. And then it also has a whole farm cost of production benchmark, which sort of talks about what would be realistic for profitability based on the scale and markets of the farm.
That's great. Tess, did you have any others?
I'm soaking in all these resources you sent
Yeah, this
out.
is great.
Thank you for that. This is awesome.
Yeah. Yep.
Well, Sam, I love your approach, especially since you work directly with farmers. It's not, you're not consulting from a financial perspective. You're consulting from a farm perspective.
I am. The farming is what I love too. It's like, that's, you know, it's funny. I have 3 people that work for me. They all are former farmers or are currently farming, right? And that's what they bring to the table, is that we understand, like, I'm not a financial planner. I understand the power of numbers, but like I said, I would much rather be out like with my sheep flock than in working on a spreadsheet. I know that I have to do this to earn the income to be able to do that as well, right? So it's really, it's just about identifying those goals and then working toward them. Yeah.
That's great. Well, I really appreciate you taking this time, and we'll be sharing out with this group and others the recording from the Zoom. Our next session is Farm Financials on April 6th at 10 a.m. And we'll send out an invitation to a large audience and have maybe next time we'll get some questions in advance for you.
Yeah, that'd be great.
Yeah.
That's going to be a really fun one.
Great.
I love the financials. You know, if you're farming, you got to know your numbers. And so
Yeah.
as much as we all don't like them, maybe I can, try to make them a little bit more fun. So
Well, thank you so much, Sam.
Yeah. All right. Well, thank you all for joining us.
Thank you.
This was great.
Great. Thank you so much. Have
Bye.
a great day. Bye-bye.